Thank you very much for that. So the big question is skip or subscribe, and should you be riding Ola Electric into Dalal Street? We now have with us Gurmeet Chadha, Managing Partner, CIO of Complete Circle, and Ashwin Patil of LKP Securities to weigh in on this debate.
Ashwin Patil of LKP Securities joining in. Ashwin, welcome to the conversation. I was going through your note, and I know you guys are pretty optimistic and you have a subscribe rating. But let me get to the heart of the matter, the losses, right? Because there are losses at the net level. There are also losses at the EBITDA level. To be fair, I mean, the rate of that loss, that is coming down. The rate of increase of losses, that burn is coming down. So that's a good thing. But, how patient will you be in terms of the path to profitability? I just want to put out that line that Bhavish Agarwal told our colleague Yash when we asked him that question on profitability. He says that as we scale up revenue, we'll get a strong operating leverage as fixed costs remain the same. We can have a point in time in the near future when Ola Electric becomes profitable. He's not putting a time to it, a date to it. Ashwin, your thoughts?
Yeah, it's difficult to put a date, Surbhi. But the thing I would say that, look at the losses and the EBITDA margins improvement. We have seen about 43%, 47% coming down to 25% in FY24 as compared to FY23. So it is a very fast kind of EBITDA margin improvement that the company has shown. Even if you go down to the losses also, about 1,400 crores of losses which the company reported in FY23, they have come up slightly at about 1,580 kind of crore numbers in FY24. So we can see that it's very any business, it requires some time to become profitable. We all know that it's just a 4-year-old kind of a business that the company has come up, and it's very commendable on the management's part that they have set up such a fantastic factory and facility in the south of India, and they are spreading their wings across the country. So with about 46% kind of market share, they have achieved a lot in last 4 years. So that much benefit we need to give to them. But going forward, I would say that they are coming up with 4 bikes, and definitely, I mean, I would take it with a pinch of salt. But the 4 bikes and the existing portfolio they are having, and the PLI that the government has given them for their top 2 selling models and their battery electrification plant. So I would say that that would definitely come into picture going forward as far as their profitability is concerned. And they have they are way ahead of other players in the 2-wheeler electric space. So I would say that we should not look at it at a current on current valuations or current basis. Definitely,
sure.
Going forward, I would say that at least in the midterm, like 1 or 2 years down the line, at the pace at which the losses are coming down, the company may become profitable. I mean, even the management is not very much sure about it, but so I think that looking at the operating leverage that the company may get, and the competition is definitely there.
Sure.
We are aware that there is a lot of competition. Then the EV demand has not been that great over the past few months, but now it is again picking up. We have seen how
Ashwin, let's break it up and take it one step at a time.
Gentlemen, we're unfortunately out of time, but thank you very much for joining in. There's another EV player, Ampere. It's an electric 2-wheeler. It's a scooter, which is housed under Greaves Cotton Green. So that's another EV player when you add, to the other ones that Surbhi mentioned. But gentlemen, thank you very much for joining in. We will slip into a very short break. On the other side, we'll discuss commodities. We'll invite Manisha Gupta on the show.